Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 28th of November. Starting off with the FTSE 100, which seems to have settled into a nice little bull flag here, 82.30 to 83.10, that kind of thing, and looks like a mid-move consolidation after the bear trap rebound that we had for the middle of this month, obviously eyeing up now 8,400. Best case was that we get up to 8,600 and the top of that rising trend channel from last year by the end of next month, the year-end target there. On the downside, hoping that we can get anything much lower than the 200-day moving average at 81.30 if there is a rug pull. RSI at 60, so in a decent zone for further gains, and suggests that we are in a mid-move consolidation above the 50-day moving average. Moving on to the DAX, and here it's just been a case of being in a range between 19,000 and 19,500. That October resistance line there, the line to break, and hopefully we could do that today or tomorrow. Thursday tends to be a good day for the DAX for some reason, and we've had an RSI rebound at neutral 50, so that would be the indicator suggesting we'll break through the October resistance line, and we've got a year-end target as high as 20,600 if everything goes right. If everything goes wrong, we'll have to test the floor of the one-year rising trend channel at 19,000 one more time. Onto the Dow, which has been up and away in the recent past, basically hit the 45,000 level, which is what we were looking for, but obviously that resistance line there from August rising by the day, that's currently pointing to 45,300 as the best case scenario target, while we're above the top of the old one-year trend channel at 44,000. Also got a bit of bearish divergence coming in there, so higher high for the end of this month, but a lower RSI trace is something to watch out for there, but market tends to be quite chirpy around Thanksgiving anyway. Moving along to Bitcoin, where it's all about trying to break 100k, and not too far away again. We bounced, I suppose, slightly lower than we wanted to, but just below the initial November resistance there at 93,800, and basically it's a bear trap rebound from below that old peak above the 93,000 area, looking for the 100,000 level to come in. Best case is the upper parallel of that April resistance line heading up to 120,000, maybe as a year-end target if we're really lucky, otherwise going into early new year. Worst case at the moment is we've got to test 88,000, the previous target, as support. Moving on to gold, and here it's been a bit wobbly and a bit volatile, either side of the 50-day line there at 26.80. Want an end-of-day close back above that. Hopefully on this occasion, if we get that, then we will then have enough gas in the tank to retest the best levels ever towards 2800. But there is support there from the floor of the channel there from February at 25.85, so that might be a place to try and catch this rally for those who have missed out. Moving on to the stocks, and starting off with Asiamet, which is has been a bit down in the dumps, but what's interesting here is that the RSI there is now around the 10 out of 100 level. That's ultra oversold. The last time we were like this was back in February, and obviously we moved from around 0.6 pence to 1.5 pence, so maybe history will repeat itself. The initial trigger on a move to the upside would be an end-of-day close above recent resistance at 0.6 pence, and that would take us then up to the top of that falling trend channel there, around 0.7 pence. Moving on to another copper play, actually, Castillo Copper, and here shares enjoying themselves after the unfilled gap to the upside that we had last month, the golden cross that we had earlier this month. The initial target here was up towards 0.5 pence. Through that, though, we're looking for the upper parallel of that broadening triangle from the autumn of last year, as high as 0.83 pence. Maybe by the end of January, ideally, we stay above the old May peak 0.44 pence while we do that. Moving along to Direct Line Insurance, which is obviously after the event, but what's interesting here is that we had fresh lows before the news today, which tends to happen, that there tends to be a rug pull 4 to 6 weeks before a potential takeover of a company. That seems to be the historical rule. The other point is that we gapped down earlier this month to shake out anybody who was accidentally in the stock and closed that gap. So it was a gap close buy signal yesterday, and obviously then today the shares have moved up. So maybe one or two people successfully guessed what was going to happen today. Moving on to EnergyPathways, which held a very decent event in the city last evening or yesterday evening. Here, shares are bouncing off the floor of that rising trend channel from August. The nominal level there around 9 pence. Above 9 pence, we're looking for the shares to hit the top of that rising trend channel from back in August as high as 15 pence, maybe by the end of next month. Ideally, we stay on the right side of 8 pence. In the meantime, the other point to note there is we've had a double bounce for the RSI at and above neutral 50, so that's a double leading indicator signal for the shares. Moving on to a stock which I don't cover very much, and I don't think anybody else does at all, which is Eco Animal Health. Here we've got one of our favourite setups, which is a bear trap island reversal, so gapping down to new lows and then gapping up off those lows. So above above the floor of the gap there at 65 pence, looking for the top of that falling trend channel from back in May as high as 85 pence, perhaps by the end of next month as a best case scenario target rather. On to global petroleum, which has been covered here umpteenth times, and today, or at least in the last 2 days, it's managed to deliver on that faith, the technical faith that we have in the shares. Rising trend channel here, heading for 0.45, which we're looking for by the end of next month, while we remain above recent neckline resistance there at 0.24 pence. So decent setup there for global at the moment. Moving along to Hummingbird, where hopefully the worst of the recent pain has already been absorbed after today's RNS, and we're gapping off the low here. What we'd like to see is an end of day close through recent resistance and the floor of the gap down that we had at 2.25 pence. If we can do that, then maybe we'll partly fill the gap down, the massive gap down that we had earlier in this month, so 3 to 4 pence maybe as a best case scenario target. Obviously, we don't want to see the shares really back below the early November support there at 1.75 pence. So above 1.75, got a chance there of at least an intermediate rebound. Interviewed MetalNRG yesterday after its Carlsberg RNS earlier in the week, and I thought it was actually a Carlsberg interview as well, but shares still hanging around either side of the 50-day line there at 0.46. Just want to see the stock push through 0.49 recent resistance on an end-of-day close basis to open up the chance of retesting the top of the channel there, heading for 0.75 penny. Hopefully the shares don't need to go back below 0.4 pence in the meantime. On to Mkango, and here we've hit our second target there at around 10.25 pence. Also interesting that both the 50 and 200-day lines are rising. So we're going into Golden Cross. Golden Cross, typically the strongest, or the run-up to one, is typically the strongest part of the cycle. So above 10.25 pence on an end-of-day close basis, looking for 14 pence, hopefully by the end of next month. And ideally, there's no dip back below the resistance on the way down around 8.25 pence. That was also the previous target. Onto Optibiotix, which seems to be rehabilitating itself now. We had the trend line break there earlier this month around 11.6 pence. Came back for a retest of support, but now looks as though we're on our way above that 50-day line at 13 pence, looking for the 200-day moving average just shy of 19 pence over the next 2 to 4 weeks. Moving on to Orosur Mining, which had a decent update today. The shares have gapped up and looking for the top of the range there, rather simply at 5.8 pence, hopefully by the end of next month, while we remain above the floor of the gap there at 4.1 pence, and that was also the old September resistance zone. Moving on to a rather unlikely inclusion today. It's always an unlikely inclusion, Premier African Minerals, but what is exciting is the way that the shares have hit our first target there, the top of that rising trend channel base, around 0.57. End of day close above that line, and we're looking for a rather unlikely 0.09. But we always have the problem here that there's a risk of a fundraise to take advantage of the strength in the share price. On to Rome Resources, and here the situation is that we've covered the shares yesterday, but the shares have heading back towards that 50-day line. Old resistance here around 0.34, and hopefully the shares will bounce off the floor of the channel, the 50-day line there around that 0.33, 0.34 level, and then zigzag back up in the run-up to the expected assay results, which are supposed to be looking rather good. Moving on to Southern Energy, and here you can see a bear trap island reversal. In fact, it's a double gap down and then a gap higher. So initial target here around 6.5 pence. If we get lucky, then there could be a move up to 9.25 pence on the basis that the shares have overshot to the downside, which is what a bear trap island reversal tends to signify. Finishing off with THG, which has been one of the more, or is one of the more difficult stocks to chart, but looks like we've got a nice setup here, a sort of W-shaped setup with a bull flag on the right-hand side, above 43 pence, looking for the shares to head up to at least 50 pence, and the top of that falling wedge, best case would be up to 60 pence by the end of the year if we can stay above the 45 pence level, which was support on the way down, and the recent resistance. That's it for me today. More updates tomorrow.